Hi, and welcome to the last trading corner of the year. We're speaking on quite an important day, I guess. OPEC are meeting to see what they're going to do with production cuts. I guess it's kind of already priced in. The market's fairly sure they're going to, continue rolling, potentially into end of 2025, right? Early 26. So, yeah, we're just kind of going to see and wait for that news later today. But between the last session and this, quite a lot's happened, right? What are you seeing on the product side? Maybe we'll start there.
I think on products, diesel had looked a bit stronger, but it's since come off. I think gasoline's had a bit of a move up, and then naphtha's been sold into. I think we're basically seeing, as probably expected last week, from the last session, that refinery runs have been picking up.
Yeah.
We've been seeing more production of products, and we've seen a bit of pressure on refinery margins, which have come off a little bit, but still are not too bad. So from the product side, I think we're still in that scenario where refineries have come back from maintenance. We should be in peak runs now, or approaching peak runs, and margins are still okay. So like margins in the East are all right, US are okay, and they're just about all right in Europe.
Yeah, no, exactly. So some of the kind of softening in the margin has been attributed to not just Brent. Brent's kind of held quite, flat since the last time we spoke, I think. I think
it went up.
Did it go up?
A bit on spreads.
And then back down though? I feel like we've come off the last week or so on a lot of the Brent.
On the structure?
Brent structure, yeah. Even expiry, for example, it wasn't particularly strong. Given where the data curve was, it was kind of in line. I think we priced around 40 cents in the end. So it was kind of fair value, I think. But we've definitely had data leg up.
I was going to take profit on my long Brent spread view, but maybe that didn't happen.
Well, yeah, it's been data has definitely been an interesting place. I think the futures market has been fairly uninteresting, but there has been so much activity in the physical. Monday, I think we had the most amount of cargoes trade in the North Sea window that we've ever had. So I think there were 8 exchanges there. The previous high had been back in 2017, where we had 7 cargoes exchange hands.
Does that imply like an agenda or just...
Well, I think it's... a lot of the commentaries are suggesting it's, the market sentiment is that just 2 big trades have very opposing views. So it's quite interesting because it hasn't really fed into the futures. When you have this kind of run up in dated, you'd expect it to filter straight into Brent, which we haven't seen. So that's kind of why I'm suggesting it's weak. It's just weak relative.
I think that's agreed. That's probably the most interesting thing at the moment. So like the front dated looks quite strong.
Yeah.
But that's not in any way translated. Well, it's not translated for into the future. So it's, in my mind, the market's basically pricing. We've got a moment of current kind of temporary strength, and then there's no conviction that will follow. And you're seeing that in still relatively quite low, like deferred Brent spreads.
No, exactly. And although to caveat that, Black Friday, when the US are out, a lot of the US, I think, are more constructive on the futures than probably Asia or Europe. So in the last few years, we've had decent sell-offs over that time when the US are out, and that wasn't the case this time round. So it kind of comes back to, what is the true kind of sentiment in the market at the minute. So if we take away what's happening in the physical, which, it's kind of between 2 big counterparts, but also it's a very small community. So there are only around 5 to 10 real players that are going to get involved in that. If we look at the sentiment of where the market thinks we're going to be pricing next year, it doesn't look too constructive, right? What do you think?
I agree. So I think most people probably see builds in their balances coming up for crude, and I think we are seeing that in the forward Brent spread. So
do you think that will be product-led? Or it's just sentiment over OPEC? And
I'm not sure it will be product-led. I think it may even be crude-led. I think some products will do relatively, like jet should do relatively well. Like lights, like maybe naphtha and propane should do well. Gasoline should do okay, but I mean, diesel demand growth looks negative. So
Right.
we're in a kind of contracting environment for that. But total distillates is probably moderate growth when you factor in jet. So like,
But compared to the data we've had the last, 3-4 years, that is bearish, right? What we're seeing.
I think it probably is, but I think that's what people have factored in.
Yeah.
So I think that's what you're seeing in Brent spreads is that people don't have much of a conviction in demand next year, and they probably see crude supply that's increasing. So I think that's what we're seeing in spreads, and that's probably right.
Yeah.
So boringly, there's maybe not a trade there. Like I mean, now it maybe feels like the market's kind of pricing it fairly.
It's always a tricky one when you're going against sentiment. I personally feel that whenever that happens, and if you look at the structure of our curve right now, you'll just get great roll-ups. So, let's say 2 weeks ago, so currently we're in 2.6 deck, Cal deck. The value of that structure for dated was reasonably low. I'd say it was around 35 to 40 cents. Even on Monday, I think it was trading around those levels. And when it comes into pricing, it's like quite convincingly pricing at around 75 cents. And the reason for that is because you have that distortion between the forward curve and the sentiment that you get there. Obviously, we're kind of deciding that the market's bearish on that, and where the true physical is actually pricing. So you are getting that premium as you roll up. And we've seen that actually for the last 3 weeks. So whether that continues, who knows? But, there's always the threat of going into a really cold spell. If refineries come under pressure, last year we had the cracks to some pipelines feeding into refineries. It might mean that we get this, break in, vol to the upside, etc., especially if people are positioned short.
Yeah, personally, I think we probably got a narrow window for spreads to perform because then I think people will start looking at refinery turnarounds in March, April.
Yeah.
So, and then it should be a fairly heavy crude balance. So
Yeah.
I think we've got a narrow window to perform, but I think you can argue the market's pricing that. So
yeah, and also if you look at last year, I think the last week of December, we were in contango in Brent spreads. And then mid-January, we were at least $1 backwardated, I think. So the market can change very quickly as well. But it's been a fairly uninteresting end to the year, I would suggest. But yeah, I want to talk about the data stuff a little bit more. I mean, I think we spoke about it last time a little bit, this short that this French major had into the East. And through that, they were buying a lot of Dubai cargoes, but also dated cargoes. So the person taking the other side was kind of a European refiner. So there is that battle going on there. Again, now it feels like it's towards the tail end of it. So many cargoes have exchanged hands at fairly good premiums. But if one of those people don't turn up into the window, the market will take that very badly, I think. So for me now, it feels like we're kind of getting to an exhaustion point. You can feel that the bids are maybe coming in a little bit softer. But as we go into Christmas, people are going to take advantage of the liquidity. And to be honest, I'd probably back the French major for that.
Yeah, I mean, from my side, maybe because I look at refinery margins more, I think margins are still okay.
Yeah.
So personally, I wouldn't go short Brent spreads yet. But if margins do come off for me, that would be the indication to maybe enter a short. But as we get closer to kind of turnarounds, that may be also kind of an opportunity to get short. But personally, not. I'm kind of neutral here.
What about structure in, gasoline, naphtha, etc.? Is it all fairly priced in? And
it's all fairly moderate. So I think the market in the US, it's pricing sort of slight storage econs for heating oil. But then it's saying we're going to be drawing as we get into winter, further into winter, which makes sense. Like ice gas oil is kind of saying the same thing. We're going to be drawing over winter, but it's all relative to spreads we've seen the last few years. It's a very kind of calm looking the market feels very calm.
Yeah.
And personally, I think that's probably right. So I don't see any massive move up in structure for.
Yeah.
I mean, even if we get some cold weather, I think like runs are ramping up in the US. Like from a transport perspective, distillate demand's not particularly strong. So like, yes, maybe we get some cold weather, but I think that's probably going to be offset by relatively poor demand on the transport side. So like, I don't see any big moves up there. And then gasoline is pricing. It's been surprisingly tight. So like,
Yeah.
oddly for gasoline in winter, we've actually if you divide stocks in the US by demand, so like days of cover, we've actually entered the tightest period for gasoline we've seen like in kind of 12 months, I think. So
Oh, wow. Really unusual for this time of year.
Extremely
right?
unusual for this time of year, and I think that maybe caught the market by surprise and why we've seen gasoline do relatively well early. So like
Yeah.
cracks have kind of picked up into winter, but I actually probably see that maybe it comes back off a bit, but I think that's maybe the trade for next year is, especially if we're in a lower flat price environment, you normally see demand growth come from gasoline,
Right.
as it's the most responsive to price.
Yeah. So what about gas naps? Because that's typically a trade that people quite like into like Q1, Q2, right?
Yeah.
They start positioning.
Well, as in getting long gas naps.
Yeah.
Yes. I mean, I think that could be. I'm less comfortable kind of trading outright naphtha, but just because I don't have that much experience in it. But personally, I like that trade from the gasoline side. So I like gasoline cracks going into summer, and I'm holding my like bearish disty view. So basically, I like a gas to heat. So like on products, the Widowmaker, just because so many people have blown up on it.
Have you warned your wife?
So like treating it very cautiously, but I like that trade heading into summer.
Okay.
And I'm calling, saying I made profit and taking profit on the Brent spread.
Okay. Very good.
I'm not sure. It'd be good to put numbers on it so we actually know if we're right or not. But
well, good job.
I'm claiming it as a profit.
So yeah, other than that, I mean, we look at the East. In crude, it's fairly balanced for us. I mean, I don't think there's anything that interesting going on. The only thing I would say is the depth of trading that's happening, especially in the windows, both in the East and in dated, so dated and Dubai, is we're getting quite a lot of volume and people taking on each other that I think we're ready for a vol spike. So for dated, I personally think it's going to be to the upside. Short term, I think. But, you know, we're looking at diffs further back on the curve around 30, 40 cents. And as you say, margins are good. Yes, they've come off, but not enough to cut runs. So I think we'll get that roll up there. And same in Dubai. I mean, let's see what OPEC do, but it's very unlikely they're going to come out with any production, which means I think we should keep that strength in the Dubai curve as well. Products, I mean, are you seeing anything on the east-west? So is there any...
East-west, no, I mean, nothing major.
Yeah,
like,
all kind of around fair val.
Yeah, I mean, maybe I'm slightly bullish east-west distillate, but like it's moved up a bit.
Okay, so
maybe
then,
it moves a bit more, but like I don't think there's anything.
Yeah, and freight, again, that's going to be kind of the kind of marginal, you know, impact to the ARBs at the minute. We're seeing a lot of TI get booked into Europe. We're seeing those draws come out of APIs as well, not too surprising. I think we've had about 10 Midland cargoes transact in the North Sea window in the last 2 weeks. So yeah, we're expecting those to keep coming over, which means more fixtures, which therefore means more demand for the freight contracts. So I think, again, there, we're not going to see too much going into the new year. I wouldn't expect any big price action. So, yeah, for now, we're going to keep those ARBs kind of moving around, Midland hitting Asia and hitting Europe, unless, you know, we get this big US freeze, which could potentially shut everything in, which, again, will lead to a good crude run-up. So yeah, I think for me, more things are skewed to the bull side, apart from the sentiment that's building for next year, which looks bearish.
But it's priced, yeah.
But it's priced. So, you know, if I was to make a calculated kind of decision on position, it would to be long.
Yeah, I don't think that's a bad argument because you're also protected. even if the balance is very bearish next year, you're protected by the storage economics. So like, if spreads go negative, people, they're paid to start storing crude. So it's kind of I think you've got quite good asymmetric risk being long. But personally, for me, I'm not. Yeah, I don't see a trade there.
Cool. Okay. So if you were to choose one trade, what would you go for?
Gas, long summer gas heat, and I'm going neutral on my Brent spread.
Neutral on Brent.
Taking profit.
Okay. And for me, probably long Jan Feb dated. I mean, I think we're going to see a bit of a spike there as people start fixing. We're seeing okay WAF premiums. Obviously, the cargoes are trading quite actively. So yeah, long Jan Feb. Great. Well, that's the last one. So we'll catch up in January. Let's see if we do run up at all. But have a good Christmas.
Merry Christmas.
Thank you.